Welcome to the Deep Dive, where we take all the source material you send us, the articles, the papers, the notes, and boil it all down into what you really need to know to be, well, instantly informed.
And today, we're looking at a move that really redrew the map for AI hardware.
It happened on Christmas Eve of 2025, of all times.
Yeah.
A massive $20 billion transaction between Nvidia, the titan of AI training,
Right.
and a company called Groq.
The pioneer of the language processing unit, the LPU.
Exactly. And this was not your standard acquisition.
Yeah.
Not at all. The sources we're digging into are all calling this a Hackquisition.
And the structure is absolutely the story here. So our mission today is to follow the material and really understand the mechanics of this thing.
Right. Why did Nvidia pay 3 times Groq's last private valuation?
And how did they manage to sidestep what should have been, years of regulatory reviews? And what does it all mean for the future of AI inference?
That's the key, isn't it? For you listening, the stakes here are just massive. Nvidia already dominates AI training. That's the building of the models.
But the whole market is shifting. AI inference, the part where you actually use the models in real time, that's expected to be, 80 or 90% of all compute demand going forward?
And Nvidia just spent $20 billion to control that entire life cycle. So, okay, let's unpack how they did it.
Well, you have to start with the biggest hurdle, the regulators. In today's climate, a standard merger where Nvidia just buys Groq outright.
A stock purchase.
A stock purchase, right. That would have immediately triggered the Hart-Scott-Rodino Act, the HSR Act.
And in real terms, what does that mean? A long delay.
It means an immediate 18 to 24-month-long intense antitrust review. It's a death sentence in the AI space.
The tech would be obsolete by the time the deal even closed.
Exactly. Nvidia just couldn't risk that kind of delay.
So they got creative. They engineered a solution where they didn't buy the company.
Right.
They bought pieces of it. And they split the whole thing into 3 very distinct legal parts to stay under that HSR radar.
Precisely. So component 1 was a straightforward asset sale. Nvidia wired $20 billion in cash directly to Groq, the corporate entity.
And what did that cash buy?
It bought substantially all of Groq's hardware patents, their chip designs, all the IP related to their tensor streaming processor and LPU architectures.
So they get the blueprints, the secret sauce, without taking on any of Groq's corporate liabilities.
But the blueprints are useless without the people who can actually build from them.
Which brings us to part 2, the talent.
The talent transfer. This is what the sources all say was the real prize. It was this mass acqui-hire.
Jonathan Ross, Groq's founder, and he's the guy who originally designed Google's first TPU, right?
The very same. He resigned from Groq. And along with him, something like 80% of Groq's entire engineering team, they all resigned.
And I'm guessing they didn't stay unemployed for long?
They immediately accepted senior positions at Nvidia. They didn't transfer jobs. They quit and were individually rehired.
Ah, and that little distinction is key. It's the same kind of move we saw with Microsoft and Inflection AI. It's a playbook designed specifically to avoid those HSR triggers.
That's the move.
Yep.
And the final piece of the puzzle, component 3, is the one that gives them the legal cover. They call it the zombie shell.
The zombie shell. So Groq Inc. still exists.
It does. It's now run by the former CFO, and they've rebranded it as Groq Cloud.
Wait, hold on. The entity that just sold its entire brain and nervous system? It's still around. What can it possibly do?
Well, and this is the really clever bit. It retains a non-exclusive perpetual license to the very same technology it just sold.
So that's the regulatory shield.
That's the shield. It allows Nvidia to go to the FTC and say, hey, competition still exists. Look, Groq Cloud is still out there serving customers.
They maintain the fiction of competition to avoid the claim that they just killed a competitor. That's genius, in a way.
But none of this legal engineering is worth $20 billion if the tech wasn't a game changer.
Right, so let's pivot to that. What was the technical weakness Groq was solving that, say, NVIDIA's own H100s couldn't touch?
It all comes down to a shift in the market, from doing things in big parallel batches to needing real-time precision. NVIDIA's dominance is in training.
Which is all about throughput, just raw volume.
Exactly. But inference, the real-time serving, is all about ultra-low latency. And that's where the traditional GPU architecture was showing its cracks.
So what's the core difference between a GPU and Groq's LPU?
It's really all about the memory. Your NVIDIA GPUs, your H100s, they use HBM high bandwidth memory. It's fantastic for throughput, for handling huge amounts of data.
Well, the memory is off chip.
It's off-chip, so you have to fetch the data, which creates these little unpredictable delays. That variability is what's known as tail latency. It's the memory wall problem.
So you've got this massive pipeline, but you can't guarantee exactly when something will come out the other end.
Right. The Groq LPU, it just flips that entire model on its head. It uses massive amounts of on-chip SRAM static RAM. Now, SRAM is way, way faster than HBM because the memory is physically right next to the compute.
Okay, but it's less dense,
Yeah.
right? And more expensive.
Much more expensive. But the architecture is built to leverage that speed. It's software-defined, and crucially, it gets rid of things like caches and branch prediction.
And doing that makes the compute
Deterministic.
deterministic.
Yeah.
That sounds important.
Yeah.
Can you give us like a real-world analogy for that?
Yeah, that's a good idea. Think of a GPU doing inference like a chaotic freeway at rush hour. You know, most of the cars will get through pretty fast. That's your high throughput. But you can't predict when the last car will arrive because of, a random traffic jam.
Variable latency.
Exactly. The LPU, the deterministic compute, is like a perfectly synchronized factory assembly line. Every single part moves at a precise time. It completely eliminates those random delays.
It kills tail latency.
It kills it dead. And the performance numbers are they're staggering. The Groq LPU was generating over 800 tokens per second.
And an H100 was doing what, about 150?
Around 150 on a good day for real-time stuff. So we're talking about a more than five-fold difference in speed and, more importantly, in predictability.
So why does that matter so much? Why is that 5 times faster, perfectly predictable performance worth a $20 billion price tag?
Because it's the absolute requirement for the next generation of AI. We're talking about models that do more than just predict the next word in a sentence.
You mean System 2 reasoning models?
Exactly. For you listening, that's just a way of describing AIs that can actually pause and run through complex chains of logic before giving you an answer.
Or for things like real-time voice assistants that don't have that awkward pause.
Or robotics that need instantaneous feedback. You simply cannot have tail latency in those applications. Nvidia didn't just buy speed, they bought the infrastructure for real-time reasoning.
And that huge valuation wasn't just for the tech, it was for the scarcity.
Oh, absolutely. The sources are clear on this. We're talking about maybe fewer than 100 people on the entire planet with this specific kind of deterministic silicon expertise. Nvidia paid that massive premium to block anyone else, a rival cloud provider, a sovereign wealth fund, from getting their hands on it.
It was a defensive move as much as an offensive one.
Completely.
So this is where it starts to become really tangible. Nvidia now has the people and the patents. What's the plan? How do you merge this entirely new LPU logic into the giant monolithic CUDA ecosystem?
Well, Jonathan Ross and his new team have a very clear mandate. They're supposed to spearhead the integration of all this into NVIDIA's 2026 roadmap.
And the code name for that architecture is Vera Rubin.
The Vera Rubin architecture. And the centerpiece of the whole plan is to integrate a new processor right onto the main GPU package. It's called the Rubin CPX.
The Context Processing X module.
Right. And the CPX module is being designed from the ground up to use the deterministic SRAM technology they just bought from Groq.
So it's not an either a situation, not HBM or SRAM. It's
Right.
a hybrid.
It's the best of both worlds. It will have hybrid memory, so you'll have massive amounts of HBM4 for capacity, to hold the giant model weights. And then you'll have this Groq-style SRAM for pure deterministic speed.
And that's what will let it handle these enormous context windows, 1 million tokens or more in real time.
It finally solves the memory bottleneck that Groq set out to fix in the first place.
Okay, that covers the hardware gap. But what about the software? CUD is NVIDIA's impenetrable moat. Groq had its own thing, Groqware. How do they merge?
That is the #1 engineering challenge they face. Groq's whole philosophy was compiler first. The goal now is to bake that deterministic logic directly into the CUDA ecosystem.
So a developer can just write standard code?
And it just compiles down to these super fast deterministic instructions without them having to think about it.
The strategic goal there is so clear. It prevents customers from splitting their spending. You don't go to NVIDIA for training and then, I don't know, someone else for inference.
It solidifies their total cost of ownership argument. They can offer a single unified stack that does everything from massive training runs to ultra-low latency inference all in one box. It keeps the customer locked in.
A masterstroke of consolidation. But with every deal this big, there are winners and losers. And this Hackquisition has kicked up a lot of dust, especially around the money.
A lot of controversy.
So let's start with the big winner. Who walked away with a historic payday?
The clearest winner on the investor side is Chamath Palihapitiya, the CEO of Social Capital. He was a very early, very aggressive believer in Groq, invested way back in the seed round in 2017.
This was a huge win for his whole hard tech thesis, wasn't it?
Oh, absolutely. Social Capital had a massive stake, and with the $20 billion exit, his personal return is being estimated at over $4 billion.
$4 billion, that's one of the biggest VC wins of the decade.
It's a truly jaw-dropping number.
Okay, so that's the capital side of the story. But the narrative gets a lot darker when you look at the employees, especially the ones holding common stock.
Yeah, the structure of the deal is really the core of the problem for them. In any startup, you have investors who hold preferred stock,
And that comes with liquidation preferences.
meaning they get paid first before anyone holding common stock, which is, almost always the employees.
Now, in a normal merger, everyone's stock just gets converted to cash or Nvidia stock, and it's fine. But because the original Groq Inc. is still alive as that Groq Cloud shell,
The $20 billion in cash went to the company, not directly to the shareholders, and that triggers the liquidation preferences.
so the investors can claim their money first.
Right. And this leaves the common stockholders, especially that 20% of employees who are not going to Nvidia, in a really tough spot.
Their options are trapped in a company that's rich with cash, but has no IP and no talent.
And the risk is that the cash all goes out to the preferred investors, and the common stock just becomes worthless paper in a zombie company.
It's really created a two-tier system, hasn't it? The engineers who were chosen by Nvidia get these new golden handcuffs, these huge stock packages.
And the ones left behind might see years of work, their equity just evaporate. This has fueled a really intense public debate. Some of the sources are framing this as something bordering on wage theft.
Because the structure seems designed to maximize the payout for a very small group of investors.
While sidestepping the obligations to common shareholders, it's a tough lesson in reading the fine print of your stock options.
So let's bring it all back to the grand strategy. This $20 billion acquisition, it's really the biggest example yet of big tech's new playbook for staying on top.
It absolutely solidifies the playbook. Don't risk the HSR review. Just buy the key assets.
Hire the essential people.
And leave behind a corporate shell, the Groq cloud, to maintain that fiction of competition.
By the time the regulators even figure out if this counts as a de facto merger, the talent and the IP are already fully integrated into that Vera Rubin architecture.
Exactly. The game is already over, the dominance is secure, and trying to unwind it is basically impossible because the team and the blueprints are already absorbed. It's a calculated, incredibly expensive risk to guarantee their future.
So this deep dive really leaves you with two massive takeaways. First, Nvidia just bought the world's best talent in IP for ultra-low latency AI, closing the one technical gap that could have threatened them.
And second, they used this incredibly sophisticated $20 billion legal structure to just waltz around immediate antitrust review and lock down their control over the entire AI lifecycle.
What you're seeing here is the rapid consolidation of our global intelligence infrastructure. It was bought at a historic premium and structured specifically to avoid interference. Nvidia now has this clear roadmap, the Vera Rubin architecture, to deliver real-time, instantaneous AI.
But it leaves you with a really provocative question. By basically cornering the market on all the key deterministic silicon talent in the world, have they functionally removed the innovation pressure on themselves?
Right. If you're the last major independent rival out there, a company like Cerebra Systems, what do you even do now? How do you possibly begin to compete against a unified, vertically integrated giant like the new Nvidia? That's the question just left hanging in the air.
A very big question.
Thank you for joining us for the deep dive. We hope this gave you the shortcut you needed to be truly well informed.